Hello guys, welcome back to UCR Forex Academy. Once again, you are welcome back to the channel. So in today's lesson, I will be explaining the hidden formula to marking a valid POI like a pro. I will be explaining the hidden formula that will help you or will assist you in marking a valid POI like a pro. Okay, so if you are coming across my channel for the very first time, I recommend you watch this lesson to the end. Try and watch this lesson to the end. This is the most requested lesson on my free Telegram community because I asked them to vote for the next lesson they want me to drop. And this lesson you are seeing I'm about to explain to you guys had the most votes. On this free Telegram community, I drop 3 to 5 setup every week. I call my signal setup because when you call me, you're not only receiving signal from me, you will also understand what I want to do. Okay, what I want to do on that very particular word spec. So as you can see, I was busy giving them signals last week, and then I had to ask them that very particular question. Which particular lesson do you want me to drop next? And they voted for this lesson I'm about to share to you guys. The only thing I want you to do is to make sure you watch this lesson to the end. That's the only way you will learn how to mark this kind of POI. Maybe after watching this lesson to the end, your own is to use the link below and visit my free Telegram community to check whether is this what this guy is sending out to us. You will check whether all these things I listed, whether I normally look out for it before I mark my POI. Okay, you just check everything. Believe me, it is gonna be the same. Okay, so please make sure you watch this lesson till the end. If you are not yet a subscriber to this channel, I don't know what you are waiting. Maybe you just want to see me once. All I want you to do is to subscribe. When you subscribe, make sure that you turn on the notification bell so that each time I drop a new lesson, YouTube will notify you that I've already dropped a new lesson. When you come to this channel, there are a lot of lessons here. This one alone will make it 60 lessons, 60 videos here on my YouTube channel, and none of these lessons here are meaningless. They are packed with a lot of values. We have market structure lesson here, we have SMC lesson here, we have risk management lesson here, we have a lot of lesson, even profit explanation, how you can pass profit and the rest of them. Your own is, have you watched this lesson? Have you watched this lesson? Have you watched one of this lesson and seen whether one of your problem is not solved? Okay, so please go and try and watch some of them. Believe me, if you are struggling in one way or the other, you will definitely understand the forex market. Okay, so we are back to understanding the hidden formula to market a valid POI like a pro. Don't forget to use the link below. Join my free Telegram community to confirm whether it is what I am explaining or whether is what I'm explaining here is what I normally give out to you guys. If you're coming from my free Telegram community, this is me keeping to my promise, and I will be so open to you guys. So we just need to be honest with ourselves. How many times have you marked a POI on your chart? How many times have you marked a POI on your chart? You waited patiently for price to come back. When price finally came back to it, boom, it blew right through your levels like it was never there. Just imagine. It just passed through that level like there was nothing there before. Okay, you sit there, you are confused, asking yourself, but why? I marked everything correctly. At least that was what I thought was right. A lot of things going on your mind, going on your memory. You don't even know where to start from. What is going on? So let me tell you, I understand that sometimes 90% of us, when we are starting or maybe in our advanced levels, or sometimes we mark invalid POI. And if you don't know the hidden formula that can help you in marking a valid POI, price will keep violating your zone over and over again. See, whatever I'm about to explain on today's lesson will never guarantee you 100% winning rate. But the truth of the matter here is that I will always assure you that keeping to this rule consistently and be following it back to back. When you come to the chart, you look out for this thing back to back. There is a higher tendency. There's a higher tendency you are going to be having 70 to 80% winning rate. 70 to 80% winning rate. I am telling you for real. Okay, so today I will reveal to you the exact formula. All these professional traders felt they are so profitable, what they are doing, because I took my time to learn this thing. I took my time to backtest this thing. I took my time to go through a lot to understand this thing. And even recently, I will show you a trade setup on BTC that is currently, I did this setup when I was preparing this lesson. Price just tapped into, when I wake up, has given over 2%, over 2% in profit, though it has reversed the last time I checked. But just imagine, understanding this lesson will be able to print all this profit for you. But let's quickly start to understanding what is a POI, and then from there we'll understand the types of POI we have, and then from there we'll now proceed to understanding what they call it, the confluence that we have to look out for. Okay, don't worry, just watch the lesson to the end. And again, I still encourage you, use the number you are seeing on the screen and contact us on WhatsApp. If you are interested in joining our online class, our VIP online class, use the number you are seeing below. Contact us, okay? Contact so that we can help you, we can train your eyes, we can assist you, and you get multiple lessons on this. Remember, in our academy, we teach you privately. It's an online class, but there's no Zoom calls. We teach you privately because we understand that that you want to learn on your own pace, and that is how we work. We have different ways we do this thing, and believe me, you will definitely come out very brilliant and understanding how this market work. Okay, so now let's explain what's the point of interest, types of point of interest. I will show you everything on the chart, and I will also explain the confluence to look out for. From there, now we'll go to BTC. We'll go back in the past. We'll check multiple places this thing happened. You could see that being profitable was you that was holding yourself all this while. You will see reasons why you have to wait for your POI. You see reasons why you have to work out, as in leave the screen, go do something else whenever you do the right thing. Okay, so now what's the POI? Whenever I explain a POI, what does it mean? A POI is simple, means point of interest. It's an area of interest. I said it's a point of interest. You can actually simply say it's a price level or a zone where you expect the market to react. Either you expect it to reverse, or you expect it to reject, or you expect it to continue. I don't know the one you really, maybe you did for sell or you did for buy. I don't know any one you did, or you must be expecting any of these things I mentioned, whether to reverse, whether to reject, whether to continue its move. Okay, all depends. Okay, you just need to understand that not all candlestick there are POI. That's one mistake you guys make. Not all candlestick you see on the chart are POI. Some of you goes as far as marking one thing or the other as a point of interest. You can even mark a clean level like this. You can just come to your chart and draw anything, and you feel that the market is going to respect that. Come on, bro, come on. So please, let's explain all these things. So now we need to understand the type of POIs we have. The types of POI, which is point of interest, the type of point of interest we have. Most of you now may be thinking that this lesson is only meant for market structure. This lesson has nothing to do with SMC, ICT, all these things you guys mentioned, all these English names you guys mentioned. So let me tell you, when you understand whatever I'm about to explain on today's lesson, you can go to the chart and be profitable. Whether you are trading SMC or whether you are trading ICT, whatever strategy you are trading, I believe there's a particular thing you are marking before you enter. Okay, so this thing will definitely help you to be profitable. Okay, if you are trading SMC, this POI is called order block. If you are trading ICT, I don't know, is it still they call it order block? Okay, so let's try to understand the types of POI we have. We have one candle POI, we have one candle POI, and we have a range created POI. Now, this range created POI are POI that I have been marking since there's a lot of things I've been doing that times. I'll be marking a lot of candles, but I'm about to show you now the advanced way of marking a range created POI. Now, when we talk about one candle POI, I'm going to be using these diagrams I've already drawn here. I took out my time to do this diagram for your own good. Now, this is one candle POI. This is one candle POI. So, what is one candle? Just and again, I forgot to tell you guys something. You can actually say again that a POI is the last opposite candle. Maybe if that one I explained about is a price level or a zone where you expect the market to react, whether to reject or to reverse or to continue. If you cannot remember that explanation, take this simple one. You can actually say a POI is the last opposite candle that led to a break of structure. Is the last what? Opposite candle that led to a break of structure. Now let's see what really went on here. So as we said, is the last opposite candle. As you can see, buyers was active in the market. A time came, there was a rejection of candle indicating sellers have already stepped in. So when the seller stepped in, this is like an inverted hammer candle. After this candle, there were a lot of selling candles that went down. Most of you want to skip the lesson because you have already known this one. I don't blame you. Something is coming now. So you see this thing now, this is the last candle. This particular candle is the last candle that led to this break of structure you are seeing here. Are you getting me? After this candle formed, we had all these massive candles that fell to the downside. So you need to understand something. This candle now stands for what? For a bearish order block or for a bearish POI. I don't know the name you want to call it, but it can actually stand for a bearish order block or a bearish POI. Now, what do I mean by that? If you want to mark this particular candle, always make sure the height of that candle, always make sure the height of that candle is protected. Okay, make sure the height of that candle is what? Is protected. Now, after the height of that candle is protected, if the low is taken, no problem. But always make sure that the height of the candle, which is this, is protected. Then you go ahead and mark it like this. Are you getting me now? So this is you marking your last opposite candle that led to a break of structure. Now, when we talk about for a bullish one, which is this, when we talk about for a bullish one, you can see when sellers was trying to sell this market, buyers step in. There were enough sellers at this point, more than buyers. And from here, it reversed and moved massively to the upside. Where is your last candle? Look at your last candle. Okay, in the case of a bullish POI or a bullish order block or a bullish whatever you call it, okay, the low of that candle must be protected. The low of that candle must be protected. Okay, but the height of that candle will be taken. Now, this is it. In case of a bearish market, the height will be protected. And in the case of a bullish market, the low will be what? Protected, just like an inverse of the other one. So all you do is to mark that particular candle like this. Now we have another type of candle which we call a range created candle POI, whatever they call it. Okay. Now this one can be very confused. Based on the explanation I gave to you, and I said that when you want to mark a point of interest is the last opposite candle that led to a break of structure, most of you will be like, now where is the last opposite candle here? Because if you have never done anything like this, that means you are still a newbie in the market. As long as you have traded the forex market very, very well, you must have been seeing something that look like this. You see this thing you see here, this is what we call a range created candle POI. Now, I am here to tell you there is no need to mark all these things as POI, because mainly there was a time I was doing this thing. A time came, I grew and I understand that there is no need to mark all these things. Marking all these candles here will mean that you'll be risking massive. Your stop loss alone will end up, if you try and mark this kind of thing on Euro USD or maybe GDP USD, you will find yourself risking like 50 to 60 pips, which is not good. Because when you reach such number of pips on that pair, honestly, like Euro USD, you will end up holding that trade for a week plus, or maybe 4 days, 5 days. Okay, so you just need to learn how to at least reduce your risk so that you will not be risking what massive. Okay, so you don't need to mark all these things. It doesn't make any sense. And let me give you the reason why you don't need to mark it and why you need to mark the breakout. You need to mark the candle that led to the breakout of that range. The candle that led to what? To the breakout of that range. Now you can see we have these candles here. They were a series of buyers trying to buy the market. Buyers stepping bought, bought. The buyers went up more than these candles. Now we are happy that we are on profit. The next thing, this sell candle now formed. You see this candle that formed is totally telling you that all these candles here are useless. In fact, if you are trading it on a more lower time frame, you will come to see something that look like this, a new high, and then this sell candle will be like a retracement that came back to mitigate the lows or came back to mitigate any point of interest around this level. I am telling you the real truth. Okay, so there's no need for you to mark all these candles here. There's no need for you to mark all these candles. The only thing now you need to focus is the breakout. Now you can see after these selling candles, buyers still step in and say it is our turn to buy. It's our turn to buy. You sellers step aside. Okay, and you can see after this candle, we had this momentum of candles that went to the upside, probably breaking a structure. Now, where is your point of interest? This is what I call your point of interest. This candle is the last opposite candle that led to a break of structure. All you have to do is to mark that candle like this. All you have to do what is to mark that candle like this. I'm currently preparing a lesson that will help you to know whenever you mark a candle. Let's say you found a wick on a candle, you find a wick on a particular candle, and maybe the candle you marked is too massive, right? And then you don't know what to do. I am preparing a lesson that can actually help you to know how to refine your zones down to that wick, the kind of wick you're supposed to be marking whenever you want to refine it, like a hidden zone lesson. Okay, I will explain later, but not on this lesson, because this lesson will be too long if I try to start explaining on that part. That's why I encourage you to make sure you like and subscribe to this channel. Make sure that the notification bell is on. That's the only way you keep on getting an update from me. Okay, so you mark this last candle as what? As the POI. In this case as well. So what about this case? Now you can see sellers step in, they try to sell, the buyers went up, the buyers tried again, sellers, because the candle shows trouble in between buyers and sellers. That's what it indicates. And then again, buyers step up again, sellers took down again. Sellers were winning, buyers now went up, then sellers said no, sellers now went down massive. Then you can see after this candle here, look at this candle. After this candle here, the next thing we saw was this massive momentum of candles that went to the downside and break the structure. Where is your point of interest? This is your point of interest. There's no need marking all these things as a point of interest, my friend. Okay, let me now show you another point of interest. Most of you that have enough experience in this forex market, or even if you're a newbie, after this my explanation, now you went to the chart and you started looking out for these things I explained on the chart, only for you to spot this kind of candle. Now a time will come, you will spot a candle like this. Let me try and log this thing. You will spot a candle. So you spot a candle that look like this. Let's try. Where is it? Okay, this part. You spot a candle that both the last candle of that very particular structure, like you want to mark your POI now, you want to mark your POI, only for you want to mark a bearish POI, only for you to discover that the low of the previous candle, as in we have two candles that their low are the same, and one of that candle is so long or is so tall or is so huge that if you end up marking that very particular candle, you'll be risking massive. Example is this candle here. As you can see, this candle is the last opposite candle that led to this break of structure here. Let me try and keep it very well so you can see that. As you can see, let's keep it like this. So this candle here, this large red candle is the last opposite candle that led to this what break of structure here. Now, most of you may be wanting to mark this massive candle. Forget that it's looking small like this on my diagram. If you go to the chart, it's always very tall, and then you wanted to mark it. See, don't mark it. It is going to be too wide. Your SL alone will be here, even you'll be afraid. Okay, all you have to do for me is to connect that previous candle that has the same low with that large candle. In this case, very simple something. Just look out for this kind of thing. For this one, you can see this the height of it is the same as the height of those ones of this particular candle. All you have to do is to mark it this way. Mark it like this. Okay, mark it like this. I'm going to show you two ways of marking this kind of POI. Just connect that candle that has the same height with it. Connect it like this. Okay, mark it what like this. Mark it like this. In the case of a bullish market, you mark it what like this. As you can see, this one is too massive. There's no need for me to mark this kind of thing, and this one is too big. There's no need. All I have to do is to reduce it down like this. Okay, reduce it, because this particular red candle here has the same low with that very particular what candle. Here is another way you can actually mark this very particular kind of point of interest, and the reason why you should even be marking it this second way I will explain now is because of you missing out on that very particular trade. Okay, because once you can see, whenever this kind of candle form, it always leave an imbalance. It always leave a fair value gap. As you can see, a fair value gap is the gap in between three candles. That's, you can see, 1, 2, 3. This red candle, this green candle, and this green candle are three candles, but there's a gap in between that three candles, which you can see. This is the gap. This is the gap in between that three candles. Okay, so normally, sometimes fair value gap always play a major role in this kind of candle whenever you mark it as a POI. Now, what do I mean? It always play a major role. There is something we call a 50% encroachment level of a fair value gap. You see, that 50% fair value gap traders look at that levels. If you meet anybody that trade fair value gap very, very well, he always aim to trade at the half of that fair value gap. Meaning that when price tap into the half of it, most of them enter aggressive, or most of them enter with confirmation. Now, in this case, you need to understand that when you are marking this kind of POI, you need three candles. You need what? Three candles. You need to connect three candles here. The three candles you need to connect is, when you look at this level, you look at this level. You have to bring two candles from the retracement, and one candle from this part. What do I mean? You can see this candle here. Look at this candle. This particular candle. Let me use my pointing arrow. You can see this candle 1, this candle 2, and this candle 3. All you have to do is to mark it like this. When you eventually mark it this way, you will end up covering the 50% of that fair value gap. Very simple. You end up covering the 50% of that fair value gap. Okay, when you mark it this way, there's a higher tendency that you may not miss out on that setup, because when price will come, price will tap into the 50% of that fair value gap. It will start pushing up. It takes a serious retracement for price to come back and tap that particular, the previous one I showed you guys. Okay, so please, you can actually, maybe at the end of this lesson, you go and backtest the one you'll be fond of. Okay, whether you'll be marking it like this, or whether you'll be wanting to be connecting three candles at a time. So now let's talk about the confluence. Let's talk about the confluence that can, or maybe the hidden formula. Let me list all of them. The things you have to look out for this time around. Concentrate, my friend. Even if it is possible, write it down. When you go to the chart, look at these things. Okay, if you are doubting whether this is not what I'm doing, see, on this YouTube channel, my Facebook link is here, my Instagram link is here. Whatever signal I give to my VIP community and it plays out, I go and post it on my Facebook and my Instagram. So you can go and check whether all this signal has all these things. Okay, so now the number one thing that it must break a structure. That's number one thing. If it did not break any structure, whether internal or external, my friend, don't ever mark it. Don't ever mark it. Even if it broke a structure and it was with a wick like this, now, this one that happened with a wick, hey, don't mark it. Stay away from it. This thing is not a proper break of structure. This thing is a trap. This thing is a rollback. This is liquidity grab for SMC traders. Are you getting me now? You need to make sure you see a full body candle close above that wick. But it all depends on the time frame you are trading on. Because sometimes we can actually mark a POS on a 1 hour time frame, only for us to go down on a 4 hour time frame or to check a 4 hour time frame. We discover that this thing is a week. Sometimes we check 2 hours is a week. Now on a 1 hour time frame is a full body candle, no problem. No problem, because time frame differs. Okay, or whichever time frame you are marking that thing from, always make sure it break with a full body candle close above that week. If it did not break with a full body candle close above that week, run away, run. Like this one now, this one is a proper break of structure. That's number one thing. That's the most important thing. Okay, the second most important thing here is that it must have a fair value gap. What do I say fair value gap is? It is a gap in between three candles. It is what? A gap in between three candles. When you look at these candles that went up, remember what I said? It is a gap in between three candles. When you look at these candles that I marked now, look at this candle. 1, 2, 3. Okay, where is your point of interest here? This is your last candle. This candle here, let me use my arrow tool. This red candle here is your point of interest. Now let me try and mark it like this. This is your point of interest. As you can see, this is your point of interest. Okay, so where is the gap in between the three candles here? Look at it. The gap is this one. This one I'm going to use a different color and show you guys. This is a fair value gap. It is always a gap in between what? Three candles. As you can see, we have a gap here. Look at it. We have a gap. See where this candle closed. Let me try and shift this thing. See where this candle closed, and see where this second candle was. See where this third candle closed. So this is the gap here. See the gap. Can you see the gap? This is the gap in between what? Three candles. There is no gap here. There is no gap. There is no fair value gap here. Example is also seen on this pair. You can see this pair. You can see this is a fair value gap around this level. Look at the fair value gap here. As you can see, there is a gap. There is a gap. Can you see anything like that here? No. Can you see anything like that here? No. And this is what we call what? Another fair value gap. This again, this is another what? Fair value gap. As you can see, this level is a fair value gap. You can see this is a fair value gap. Can you see? This one again is a fair value gap. Where are they? I think there's another fair value gap around this level. Okay, so as time goes on, I will keep on showing you guys everything about what fair value gaps. Okay, so it must have what? A fair value gap. Next on the list is that it must have inducement level. It must have what? Inducement level. Now, this inducement level is one I will not spend much time explaining because of what? Because of time. This lesson will be too long. But when you come to my channel, scroll down to what? Scroll down to what they call it. Scroll down to SMC tutorial. You will learn more about inducement levels. Very simple. Okay. Another one that is very, very important is that it must be unmitigated. Right? This one is the one you have to take serious. You have to take it very, very serious. It must be what? Unmitigated. When I say unmitigated, it must be a POI that has never been touched before. Now, what? Let me explain. Very simple. Now, let's say the market went up like this. Let's say you had a break of structure like this. The price break above this high. We know that our last candle is somewhere sitting below this level. Then price came down, give us inducement level, which you can see. This is our inducement level. Later, price started coming down and mitigated that zone. The next time, price started going up like this. Are you getting me now? So where is your new point of interest? Is somewhere around here. You can see that this level has been mitigated. This level has been mitigated. This level has been mitigated. So this is our new unmitigated zone. These are our new unmitigated zone. There's a lesson I'm preparing concerning counter trend and trend continuation POI, and why sometimes you will end up marking POI, price will still come and hit your SL. That is because there was a particular thing you are doing that you're not meant to do that, because there are sometimes you are meant to delete one of these POI. There are sometimes you come to the chart. As you can see, there was a signal I gave to the Telegram community, to those in both my free Telegram community. I dropped this sell. We made 4%. Go and check it. Use the link below and go and check. We made 4% on this move. So when I gave them this signal, I told them the entry point, the SO, and everything. So price came and gave us what? 4% on every particular setup. And as you can see, I'm still looking forward to buy around this level. Now, sometimes you may have this kind of two things now. You'll be wondering, why is this guy always looking for a way to buy at a specific price level, and he's also looking for a way to sell at another price level? What is going on? What is this guy actually doing? You see, that is me understanding there's something we call a counter trend and a trend continuation. You will always see that a time will come. I will tell you, delete this one, keep this one. You don't know, I will explain later on. That is why you need to subscribe, my friend. Okay, so more about the counter trend, more about the unmitigated and mitigated POIs is seen on this particular lesson. Just come on market structure. You can see there's a lesson I prepared on this particular what they call it, market structure VIP lesson. This one has a playlist. Go and watch. You understand more about unmitigated and mitigated POI. Very simple. Okay, so we have already talked that it must have a break of structure. That's number one rule. Secondly, it must have a fair value gap. Third, it must have engagement level, and then for it must have what we call a this thing. It must have what we call what they call it again. It must be unmitigated POI. Now let's quickly look at the chart to see whether some of this setup I normally share has or let me just show you the BTC. Though when I checked last, I think it's running on 1:1 now. Though my Excel is currently at break even. Even the place this thing is reacting from, I even knew that it's going to react around that level because I'm using my second PC. If I'm using my main system, you would have even seen the setup very, very well. But you can see, look at the setup here. Look at when I did the analysis. Let me show you guys. Let me show you guys when I did the analysis. Okay, so you can see when I did the analysis. All right, so look at the analysis here. Look at the analysis. Can you see? So look at the analysis when I did. I mean, this one is good. Okay, so let me find a particular one. So look at it. This is BTC when I did the analysis. As you can see, it is an unmitigated zone. It has a fair value gap. It has what? A fair value gap. It has what? Inducement level. Now let's go to the chart. Look at that setup here. Let me delete this one. This one has already played out. Okay. Look at the setup here. And when price tap into the zone, it bought massive, and this setup gave 1:2. It gave 1:2. Though there was another zone here, there was another counter trend POI around this level, which you can see that on a 1 hour time frame, on a 2 hour time frame. There's an internal break of structure here, and after that internal break of structure, you can see there's a particular POI. Look at it here, my friend. Look at it. Look at that. Is a one candle POI. Let me try and log this in up. Is a what? Is a one candle POI. Let me use my arrow tool and show you guys very well. Is a one candle what? Is a one candle POI, and after that there's a fair value gap. Can you see a fair value gap? And there was what? A break of structure. Do you know there was even an inducement level around this place? There was even an inducement level around the particular what level. Now, what I was trying to do there was very simple. I was even praying for BTC to come up and trigger this one first before mitigating this level. But what happened while I was sleeping? Price has already come and tap into this level. Price has already, before I went to bed, price has already tapped into this level. Then I had to delete this one. Okay, now you can see price went and gave sniper entry on that level. Currently running on more than 1:2 of this one. It's currently running on almost close to 3% now. And I am now expecting a reversal around this level. A reversal around this level. Now, even that level I'm expecting reversal is because on a 1 hour time frame, this can serve as a what? As a change of character. And this level is like a trend continuation what? POI. This particular level I marked here, this level is like a trend continuation POI. It has a fair value gap, it has a proper break, but it doesn't have any inducement level. And that is why I'm not really placing my order there. I have just left my entry that way. Anything that happens, I will actually take it. But just see. Now let me show you guys more of this particular setup. Look at this one. Look at this one. Now remember that part I told you guys about two candles that normally have the same low. That normally have what? The same low. And you'll be asking yourself, where is the point of interest around that particular level? Now look at this. Look at this candle here. Look at this candle. We have this candle around this level. We have this massive red candle here. and we have this massive, and we have this short green candle. It's just like an inside bar candle. It's currently inside this very particular what red candle. You can see this red candle, and you can see the what this very particular candle. Now, very simple. What do? You mark this candle. There's no need for you to mark all these things. This is BTC now. There's no need for you to cover. This one is too big, it's too massive. So all you have to do is what? Is to mark it like this. Just like as I explained on that very particular what lesson. Even this one is another example. Although this one is very, very good. Let me show you guys more places. Another POI as well. Okay, let's go to the place it has already played out. Let's go back in the past very, very fast so that you can see this is BTC on a 1 hour time frame. Even if you don't want to be refining these zones, just stick on a particular time frame. Believe me, you will get it right. Okay, let's start from somewhere around what they call it. But let's start from this level. Okay, you can see this. You can see this POI now. Look at this POI. Look at this. There was a little retracement here. Price went up massively and break its structure. Number one rule. Number one rule. Number one rule. The second rule is that it has what? A fair value gap. Look at the gap. Look at the gap. Look at the gap here. The third rule is that it must be unmitigated, and I think it must. Okay, third rule is that it must have an inducement level, which you can see the inducement level here. And the fourth rule, it must be unmitigated. You can see. Then I waited patiently. There is no need to rush. There is no need. You see how long this thing? It didn't even take. We marked this POI on 11th of July. We marked it on 11th of July, and we left the thing. We left everything on 15th of July, Tuesday. That is 4 days. I think something we mark on 11th, and it came back after 4 days. You can see price rewarding your patience. Can you see price rewarding your patience? Very, very nice. You can see this is how we played out. Gave more than 4%. Now this one is like a counter trend POI. I will explain. I will not delete anything on this chart. I will explain to you why some of this POI always fail sometime. If only you can actually subscribe. Now look at this one as well here. This one is the one I explained about range created candle POI. I think not really. This POI is seen on a 45 minutes time frame because some of these POIs are being refined. Okay, as well as this one. As you can see, this one again. This one. Now look at. Remember what I told you guys about the breakouts, about not just marking everything, because if somebody now will come, it will just want to mark everything like this will be massive. All you have to do is to concentrate on the last candle. Now look, we had a series of candles around this level. There was this candle that sold. Buyers were still struggling, trying to take it up. After this red candle, let's try and lock this thing up. After this red candle, we had this momentum of candles that went down. Look at the fair value gap here, and this is our break of structure. We have both an internal break of structure and external break of structure. If you don't understand external and internal break of structure, visit the market structure VIP lesson. You will understand. And we have the particular what inducement level. We have a fair value gap. We have unmitigated zone. Price came back, tap into it. A zone we marked on 18th of July. Price came back to it on 22nd of July. That's after a few days. Price came back to it, and price played out massive. See another one. This one is a range created candle POI. In this case now, you can see in a particular case, you can actually concentrate more. I think this one is a 2 hour candle POI. Let me go to 2 hour time frame, because some of this candle I marked it in different time frames. Okay, that's the reason why you are not seeing. Look at it here. Look at it. Can you see? Look at that. Look at that particular candle. Look at it, and you can see the candle has a fair value gap, and then it also has what? A break of structure. Internally, there was a break of structure. Okay, you can see the break of structure here. There was a break of structure around this level. This will now serve as my inducement level. Next thing, when price came back to a price sold massively. Concentrate. I always look out for the one that has a break of structure, inducement level, fair value gap. Look at this one as well. This one, a one candle POI. When price came, price violated above that zone. It normally happen. No, that's how I always show you everything, so that you will not be too confident of yourself. So that whenever this kind of thing happen, you hold your chest and know it always happen. Now see everything that came. Now we discovered another POI. This one is seen on I think on a 30 minutes time frame. I think, yeah, this POI was actually seen on a 1 hour time frame. There was an internal break of structure around this level. Always make sure that one of the structure is broken, whether internal or external. And as you can see, we have a proper break. When this candle close, or if you are seeing this on a 1 hour time frame, you will not be able to take it, because you can see this one is a week, the next thing is a week again, the next thing is a week again, but there was a full body candle close. Can you see above all the below all those week, confirming that this BOS is valid? Now the second thing you go and check out for is fair value gap, which on a 1 hour time, on 2 hour time frame doesn't have it, but on a 1 hour time frame of this setup it has it. Okay, it has a fair value gap, and it also has what, an inducement level, and it's also what, an unmitigated zone. That's why price came back to it and respect massively and dropped to the downside. Always look at this one as well. On a 2 hour time frame is valid. You can see a break of structure, and you can see our inducement level, and you can see our fair value gap. Let me show you our fair value gap. See our fair value gap, and price came back, tap into it, one candle POI. Very simple. Price came back, tap into it. After everything, price sold massively to the downside. I will be showing you something. I'll be showing you something. Now, whenever price mitigates a zone, like this zone now, price has mitigated, there's no need for you to mark this zone again. There's no need for you to start extending this zone. There's no need for you to start extending. No, 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 no. Although in our next lesson, we will be talking about order flow, and I think that lesson will come with a counter trend and trend continuation. We will talk about order flow, equal high POI, and equal low POI. We're going to be talking about that lesson during that time. Okay, so you understand all these things, and also weak. Please make sure you like and subscribe. I've shown you a lot of things that is meant to convince you. Let's go again. Let's check. Let's check for more. Let's check for more. Let's check for more. Somebody will ask me, why am I not marking any POI here? That order flow, counter trend POIs, and the rest of them will tell you why it's risky to mark this candle as a POI. So let's proceed. So look at this level. Let me go back to 1 hour time frame. So you see, we have come over to almost for something minutes. That's because I'm taking my time to make sure that you understand this thing. Whether you are struggling to understand something, I've taken my time to do that. Okay, we start with this. As you can see, price went massively break a structure. There was an internal break around this level. But let's start from below. Price violated the wick, and then went massively, broke this structure. We had a little retracement. Price went up again and break a structure. Now look at the confirmations I always look out for. I always look out for a fair value gap. It has a fair value gap. It has an imbalance, double times. Okay, and when price was coming back, I was not interested. This served as my inducement level. And at the end of the whole day, when price was still coming back, now look, did I mark any points of interest around this level? Did you see me marking any points of interest around? No, 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 no. All because of what? I can't see a fair value gap. I can't see inducement level. I can't see unmitigated zone. The structure of the market around this level is very confusing. There's no need for me to start doing something else there now. So I left it, and I make sure I waited for the market to start coming down. While the market was coming down, something catch my attention, draw my attention, which is this candle. You can see I always pay attention to where there is imbalance, unmitigated, and inducement level. Now look at this candle that stood out. When the sellers were selling the market, buyers stepped in and tried to go up. Sellers said, no, 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 we are still in the market. And sellers sold with this candle. There is an imbalance around this level. Train your eye. That's why you need to join UCR Forex Academy. So that when we are doing this thing one-on-one, believe me, you will understand. So after this imbalance, we had all this sell to the downside. This will serve as our inducement level. I would just love to mark it like this. This will serve as what? As our inducement level, which you can see is already a counter trend. We are waiting for the market to return back to it. But while we're waiting for the market to return back to it, price has already tapped into this one, but massive, went to the upside, broke an internal structure. Look, it broke what? An internal structure. I also a change of character. I also started paying attention to it because it still has the same thing I normally look at for. Look at it, a one candle POI, an imbalance. Look at the fair value gap, an inducement level, and unmitigated zone. And finally, price played, respected this one, went up, but violated this one. Okay, though I will see this play why he violated this one, on our lesson, on our next lesson. Please, if you benefited from this particular lesson, if you truly understood this lesson, please, I want you to like and subscribe to this channel. Make sure you share this lesson. Drop your question on the comment section. I will always be there to answer your question. Thank you, and may God bless you.